Yo, 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 everybody. Sorry, guys, the StreamYard that I use, it's not doing good. It's normally I can have my overlays, y'all know, and it clicks real smooth through all of it, but it is not happening today. What's going on in the market? We've got oil dropping. I was up like 15% on this trade, then it dropped. So let's take a look at why it dropped. The stock market is looking very good. We still haven't showed signs of weakness coming through that gap, the big good old gap that we had. So currently I am long oil, short the stock market, down a little bit on the shorts on the stock market. And then hold on, I'm trying to check out a couple things. And then right now it's about break even on the oil trade. But crypto's looking really good. The stock market's looking really good. Is it possible that we're going into a bull market, or is this going to be looked back at as the biggest bull trap in the actual world? That's what we've got to take a look at. That's what we've got to take a look at today. And that's exactly what we're going to do. We also have CPI data coming out tomorrow, and we had some data come out today. And so the data that came out today, we need to take a look at and see what it looked like. It was pretty flat, but not really looking towards a bullish overall outlook. And so it's puzzling. Why are the markets reacting so good? Is it just exhaustion? Or like I said, is there a lot of manipulation on leading to the next great bull trap? I don't know. I'm cautiously optimistic. As we look at all this, we look at oil right here. It's back to the entry point. I never move the stop loss up into profit. I'm leaving it here. I wanted to play the full range of the trade. If you got in this trade, could have had 15, 20% profit and closed. Obviously, I'm not a financial advisor. Nothing that I do is financial advice, and always do your own research. But we got a lot going on. But we've got my friend coming who I met at ETH Denver, DePin Connection. Okay. I told y'all about him yesterday. He has a YouTube channel. Handsome looking fella. He's like 8 foot tall, makes me look like a dwarf. He posts a lot. Him and I have a lot of things in common. Like I was saying yesterday, he's the only one that I could talk to about macro finance that he actually, like we were talking the same language, right? And so I'm really interested to get his take on what are the best DePin projects. And this is decentralized physical infrastructure, right? So this would be real utility type stuff like Akash, okay, like renting GPU power and things like that. I think that'll be a lot of interest. So, guys, let's see. Where is it? What's going on? What's going on? Why is everything messed up today? Oh my gosh, the market's going up and nobody knows what to do as a result. And so nobody can find absolutely anything. But let's come over here and see if there's a category. DePin. There we go. So this decentralized physical infrastructure, right? Bittensor TAO can kind of go in there. AI and DePin kind of go hand in hand because you need a lot of decentralized compute, or at least that would be the most optimal way to do it for a lot of AI projects. But you can see Filecoin, Render, Helium, I know he's big on, Akash, but I think there's some really low cap gems, kind of like this IOS and some more that he'll be able to educate us on and let us know. So guys, before we get started, if you're over on YouTube, thank you. Thank you for being over on YouTube. Please click the like button and subscribe, and welcome to the Finance Freeman family. And if you're over on X, if you're over on good OX, please follow us. They've been purging the bots. I lost like 250 followers, but that's good. It's good. Purge the fake accounts, purge the bad accounts and stuff. But X is really doing a big thing on trying to clean up the overall network. And our new sponsor, Monster, and I'm just joking. I absolutely wish Monster was my sponsor, but they're not. But we do have a wonderful sponsor, which is Blowfin, where I was showing y'all the oil trade yesterday. So if you are interested in a new exchange where they've got commodities, stocks, crypto, everything, depending on where you are, you can use the QR code on the screen, or there will be a link on YouTube and then my pin page right here with about 20 spots less. I haven't looked since yesterday, actually, but get VIP 1 for the first month for 30 days, and you can read this and kind of go through what they are offering. But let's get into it. And then I want to show you a very sad story about risk management, because we see a lot of people making money, but hearing about people losing a lot of money, which, don't get me wrong, if I look at my account right now, it looks like I'm down. Well, I'm still up a lot on the month. But the last week, I'm probably down a couple grand, right, on that short. But I'm going in that with size. But I'm not closing, right? I'm still, my conviction's still there for that trade, and I'll let you know where it'll be invalidated. Let's see what in the ham sandwich is going on. Yeah, dude, that's what we are going to get into. Hello. Is this like that Kim Jong-un thing? Did you see that? Did you see that? Say something about Kim Jong-un if you are real. Gogurt. Need Bittensor TAO. I think it's coming. You have Ski Mask Dog? I love Ski, but no, I don't hold it now. Let me pull out my crystal ball. Man, what a moose. What a moose. I've never moose hunted, but I deer hunt. But wow, what a moose. Look at that, guys. I don't know. Do you categorize moose the same way you do deer, like counting points? Like, oh, that's 10 point, you can measure them and things like that? Or what? Because that's a massive moose, guys. I'm leaning bearish and think it's a trap, man. We are only started going up with bullish news for the U.S. meeting Saturday. Curious to hear your opinion. Yeah, it's pretty much my opinion still, and we'll go through all of that. But I could definitely be wrong, but I'm that's where my thesis is right now. But we'll break that down, and I want to show you all a story about somebody that is very sad, and we're gonna go through it. Yo, what's up, Miss Crypto Empress? My great friend. Go follow her over on X if you do not already, guys. If you don't, go follow her. It's a blast. Yeah, same basic scoring. Cool, man. I took my son deer hunt for the first time this year. It was had a great time. I mean, I've been going my whole life, right? But my son was just now old enough, and I took him. It was really fun. Okay, let me go down my checklist. I think I already did my little disclaimer and all that stuff for y'all. Okay, yeah, let's break it down. So first off, I always try to educate everybody, right? And I do this full-time, content trader, everything in between. But risk management is a huge thing, right? Like, I'm heavy short right now. However, if I wasn't in the right type of trades, if I didn't have good stop loss, you can blow a portfolio, right? 6 figures gone in the blink of an eye. And so I want to come over here and I want to show this John Locke. Okay. He has this funny picture. That's obviously not him. He's grown this account to 44K followers, always doing super high leverage SPY, S&P 500, essentially, things. And you can see this account, okay, down 153,000 in the past month, right? For being overly bearish, trying to trade this market, right? And that's the tricky thing about options, and is why I lean towards like inverse ETFs, right? Because there's not an expiration date in a month or in 2 weeks, right? Now, there is some fees and things like that, but it's not like, with options, if you think the market's going to go down and you buy an option for next week and the following Monday it craters 90%, you didn't make anything. You lost, all your premium. And so he said, many of you knew me as the guy that turned $300 into $200,000 to $300,000 in just a few months trading SPY. Lately, there's been a lot of positive and negative noise around me, but today hit me the hardest. My biggest mistake was pure ignorance and sizing way too big, despite solid advice from experienced traders here. I ignored it at times, and today I paid the full price for it. To be honest, I'm left with 10,000. It's only April with 8 months left in 2026. I'm determined to build it back up. The lesson will stay with me forever. To all the traders out there, please use my story as a warning. Don't be like me. Control your emotions and your size. And I will continue to post about SPY and others. I deeply appreciate every single one of you here. And so, you know, even yesterday, he posted this same trade right here, the same exact setup. Okay. And what I want to show you, if I can find it, is he was up 35%. And, you know, he didn't close it. He was up 35%. Let's see. And the guy does a lot of short-term technical analysis, which can get you in trouble. So look, this is that same trade. He was up 35% in probably minutes, maybe an hour, you know, and he didn't close it. So, I mean, it can get very dangerous, you know, it can. And so it's greed. So pray for John Locke, man. I feel bad for him. Hopefully he's okay. I know that can cause a lot of depression, a lot of other things. Like he said right here, they put this was yesterday, PCE to be released tomorrow, CPI this Friday, and PPI next Tuesday. You know, so there's a lot of potential bad news. So he could have been just a week off. He could have just played it a little too tight. You know what I mean? But it just shows that with any of this, you know, you can never risk more than you're willing to lose, especially in anything that has a liquidation level or an expiration date. You know, very, 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 you know, rough. So here's some data right here from this morning that had came out. Corporate profits from national income and product accounts covering millions of U.S. companies rose in Q4 with an increase of 246.9 bill compared to 175 bill last quarter. Okay, so corporate profits are going up. Fourth quarter GDP was revised down to 0.5 versus 0.7 that was expected. Personal consumption was down, okay, and PCE price index was unchanged. And so I have a post about this that I tried to make it easy to read, easy to look through. I'll put, I'm so short the market. The only thing I'll be able to say is welcome to McDonald's. Can I take your order? But then I said, just kidding. I use good risk management. Look at this, guys. Can you believe that? President Trump posted this on Truth Social, okay? Him and Dana White advertising the 4th of July White House fight at the White House UFC. I think that's awesome. But there's a stake gambling logo on the bottom of it, and he posted this. I can't believe that. I literally can't believe the president posted a stake gambling logo. What if he does this? Emergency press conference. The whole country's watching, and he's sitting there doing stake slot machines. What if? Oh my gosh. Oh man. Crazy. Crazy. So let's go. Let me go through. This is why I have such a problem sleeping. Me every day at 3 a.m. checking markets when Trump's president, because you just never know what's going to happen. And volatility is good. You know, there's always somebody winning on the other side of a trade, right? There's you know, even this sad story we just went through with John, right? Somebody won on the other side of that trade. Somebody went long. And so yeah. Let me track let's go. Yeah, so on a shorter time frame, we still have it. So this is a good example, and we'll see if it plays out of what a bearish divergence is. You have a bullish divergence and a bearish divergence. A bearish divergence is actually when you have price going up. However, you have RSI going down. And so this is just one indicator to look at for future price action where you think it's going to come. Now, obviously, the shorter the time frame, the shorter the move. The longer the time frame, the longer the move. But that's a good example of what a bearish divergence is. A bullish divergence would be the opposite, where price is still trickling down. And that's what I want to look for to try to find the bottom for BTC in a bear market. The price trickling down, but RSI going up, starting to show some strength in the market. And that is a bullish divergence. Making some notes here. And so let's see, it wouldn't surprise me. And so getting back to this question, like leaning bearish, it wouldn't surprise me if we get some downside. I don't think we're going to close this whole gap, but we could. I mean, I guess we could, not today, right? But, the market, in my opinion, okay, and this is just my opinion, right? I'm just some random dude on YouTube, guys, not a financial advisor, right? Or some random bozo. Okay. At least that's what my wife calls me. So, I think it's overplayed its hand. And I'll tell you why. If we come over here and we look at the post I made this morning, which is talking about where the state of the economy is. Okay. If you take a look at the state of the economy right now, it's not looking great. Okay. Economy is hurting. Okay. GDP keeps getting revised down. It was originally reported at 1.4, probably the market pumped at that time. Then it was revised down to 0.7, now 0.5 GDP, right? And so when we start looking at this data, okay, PCE came in the same year over year. Core PCE came in the same year over year. So that's why the market's been okay today. Personal spending's down a little bit, which is bad, right? We're a consumer economy. You want people spending money, spending dinero. Personal income is down 0.1 when it was expected to grow to 0.3. And then the gross domestic product or production got revised down. And so when you look at this, and we also look at a time that jobs are not really being created. We had a negative 90K job report not too long ago, like a month ago. Okay, so jobs are going down. Layoffs are slowly starting to increase. We're looking at sticky inflation data. We're supposed to be at 2% inflation data, right? And so that's why CPI and PPI coming out Friday and then next Tuesday is going to be very important. But so we have sticky data right there. And then what would typically happen is if inflation was good, the Fed would swoop on in, cut some interest rates, maybe do a little bit of QE. You'd have a little bit of inflation on the backside of it, but it's okay. We're in a consumer economy. We're going to pump the markets, all of that. But the problem is now is we have elevated oil, and oil right now is moving off of headlines. When headlines are gone, we're going to have to see what the actual price of oil is strictly from a supply and demand standpoint, But when I'm looking at the markets had went down to here, okay? And remember, if it's in the news, it's already in the chart, right? If you're seeing it on the headlines, don't think you're early. It's already baked into the chart, right? And so there was thoughts of end of the conflict, right? That Trump was going to taco or whatever they say. That happened. But the ceasefire is not going as planned, or at least as one would think to be planned, right? If we take a look, let's go through the news. In Pakistan, authorities locked down something ahead of the U.S.-Iran peace talks. A 2-day public holiday was also declared. Breaking, start injecting European gas reserves now. So people are using their reserves. Man, I don't like this new news thing that we found. We found that yesterday. Okay, 65% of stocks in the NASDAQ, which is the SPY essentially. Oh no, the NASDAQ's the Qs, never mind. Which the Qs move a little sharper, is heavy tech stock, right? Versus the S&P 500's just, top 500 something companies in the US, but are now trading above their 10-day moving average, nearing the highest since early December. This percentage has surged 40 plus points in just 5 trading sessions. By comparison, in the second week of March, just 12% of stocks traded above their 10-day moving average, the lowest in at least 6 months. In the past, the NASDAQ 100 has been higher 80% of the time over the next 12 months after such a sharp reversal. Furthermore, 70% of stocks in the S&P 500 and the Dow Jones is also trading above it. The market is setting up for a historic recovery. The U.S. and Iran will hold in-person peace talks in Pakistan. The U.S. delegation includes J.D. Vance, Jared Kushner, Steve Witkoff. What'll make me flip my overall bias is temporarily is if the Strait of Hormuz gets opened. But, we're still in some issues because even if the strait's open today 100%, right, it takes 4 to 6 weeks for this oil to get to wherever it's going. And so one could argue that we haven't even really felt the pain of it being closed yet, that the pain's just now starting to arrive. And so the pain's starting to arrive. People start spending less. Companies start making less. Over the summer, reports come out, bad earnings reports, things like that. But it's really interesting, and it's a good lesson as to why conservative investors or people that aren't in tune with the day-to-day in markets should primarily be in indices like this. Because if you look at something like Tesla, something like Microsoft, like look at Tesla, a stock I really like, down 32%. Right now, the S&P is down about 3% from all-time highs. So obviously you don't have the sharp gains, but you're also protected, right? And as always, it really doesn't matter the asset. If you want like a Pico great entry, look at the 200-week moving average. The 200-week for Tesla right now is about 270. Another one I'm really interested in is Apple. And just go historically, right? This is going back to 2003. Look, you go under it for a little bit, for a few weeks. That's the 2008 recession, right? The housing crisis. And then these times it tagged it. Like if you just went and found amazing stocks, and if you just went and found amazing stocks and bought them at the 200-week moving average, like look, Microsoft is there. And this is going back to 1989. So there was a period of time from the dot-com bubble, which just kind of makes sense, 2000 in the dot-com bubble to 2012. It was hovering right around it, okay? And that was after a historic run, right, leading up to the dot-com bubble, where a lot of companies, a lot of SaaS companies cratered, right? But if you come over here since, 2012, it tagged it a couple times right here. So is it going to break underneath it? I don't know. We'll see. But like I've been saying for a while, the number one thing I think everyone needs to look at is oil. Oil is going to be the deciding factor for a lot. But that's a pretty good comparison of showing how bad some individual stocks are down versus, if you were just to, look at indices. Look right here. NVIDIA is $92 for the 200 week. And then let's come look at BTC. We almost tagged it. So going back to 2015, where Bitcoin was $215. So basically that's after 200 weeks of existence, because that's when the trend started. You can see, did we actually tag it here? Yeah, we actually tagged it there. Barely went underneath it here by about 50, 60 bucks. You can see here during that illness, we swept below it 30%, but that was just an empty wick. Like if you look at the bodies of these candles where they ended, you can see this one ended barely below it, and the next week we ended barely above it. Then if you look to 2022, we spent about 300 days under it with a 30% decline. And then if you look at now, we almost tagged it, but not quite. And it's currently sitting at $59.7, which means if we use the price from the bottom of the wick earlier, we actually just about hit it, right? It was a little lower back then. But that's how this works, right? Because it's taking all this into consideration and getting rid of these and using, more of this higher data. So this average, you see it come up, and then, the longer it lasts. Dang, we got a lot of people in here. Love this, fam. What's up, bro? What's up, amazing fam? Go Trump, bullish fam, all the way. What's up, man? Hey, when's our pod coming out, bro? I'm ready to see it. Moon, man. If we are entering a bull market, I'll tell you, there's a lot of very good quality altcoins, which is what I'm interested to talk about. DePin Connection about. We're going to bring him up in about 5 minutes. He's in the waiting room right now. Lots to talk about, I'm sure. Yeah, man. Tons to talk about. Microsoft makes zero sense to me. There's always been free Gen Linux. Why people are using Microsoft boggles them. Easy use. Right. Easy use. I'm wondering when we're going to see some profit taken coming in, though. A lot of people are making money on the SPY. We're $6.91, only $20, $18 from an all-time high. Let's take a look at this. So this chart only goes back to there. Why? Oh, because it's crypto. Let me find a better. So this is the S&P 500. Tag the 200. Was this .com? No, this is 2008. Went way under it. But seriously, guys, for the last, since 2008, we've basically been up only. Yeah, you've had some drips along the way, but we really haven't had a recession, right? Like a bad recession since 2008. This one during the illness was Fugazi. This was a good correction back in 2022. But something like this is what I would expect. I mean, it's going to happen eventually. Is it going to happen now? I don't know. Because if you really look at this chart, this one was man-made and this one was man-made. You had tariffs and then you had the illness. Which the illness isn't what did it. Shutting down world economy is what did it. And so when are we going to see this? And if you look right here, like I said, this is the weekly. Okay. If you go from here, price going up, RSI going down. Like that's a bearish divergence on like a big time frame, right? Even here, if you look, price went up, RSI went down. Yeah, we gapped way above that. All right, guys. If you're over on X, yeah, it was. Yeah, it was. I didn't want to say that though. But guys, if you're over on X, tag your favorite DePin projects. If you're over on YouTube, comment what your favorite projects are. If there's anything y'all want us to look at. Now, this is normally very clean. I have everything set up beforehand. I can just click a button and do it all. But something's going on with StreamYard. They did an update, and so it's not going to be as clean as I like it to be. So close your eyes for 10 seconds. Everybody, close your eyes for 10 seconds. Okay? Nah. Let's see. Let me remove this. See, normally I got this all set up where I can just do it, and I have it all pre-set up, but they're not playing nice with me today. What's up, buddy?
How's it going, man?
It's going wonderful. Nice to see you. Nice to see you. Yeah, man, normally it's all smooth. I'm able to be very, very smooth and have it all pre-set up where I can just click one button and move to a different scene. But today, I don't know. They did this a couple weeks ago too on me. And I don't know. Where do you use to stream?
I used to use StreamYard until recently. I switched to Restream, which seems to be a little bit better, man.
Really?
Yeah, I was finding with StreamYard, I don't know if it's just me, but like I would lose audio when sharing my browser sometimes. I have to reshare, and I was having trouble with restreaming to some of the other sources, some of my other platforms. So Restream's been pretty solid. I'm still kind of, you gotta like, the more you deal with it, the more you can like learn the tools, get smoother with it. But
Right.
yeah.
Yeah, man. I'm new to the streaming world and all that. But hey, man, thank you for joining us. I'm very excited to hear a lot about what you want to talk about, and we can go to another overlay if you want to have me share a screen, and we can look at some projects and stuff. But I think we're at a time where, ever since I've been in crypto, which has been a long time, it's been speculation. Okay, what this is going to be able to do this, and people bid it up to crazy valuations, and this is going to do this to change the world. Well, DePin, we're at a point to where, like, if we just look at compute, for instance, that data centers are spending a ton of money on compute, and in a decentralized manner, it could probably be done for a lot cheaper and a lot more efficient use case of it. And so that's why I was really interested to talk to you, not only about what is DePin, but even some potential gems that you had. So why don't we start off? Tell us a little bit about who you are, what your channels are, your streams and stuff, and then what is DePin and how did you get into that as your overall narrative of choice? I mean, after all, it's a part of your name, right? So
yeah, certainly. What time do you want to go to? I don't know how much detail to go into, but what time do you want to run till?
Probably about 45 minutes or so.
Okay, perfect. Yeah. So I've been in, I guess, the crypto space, digital asset space, for 5.5 years now. So before that, spent a lot of time in sales. I was a national sales trainer for some time in the solar industry. I worked in the drone industry, and it was really during, I guess, like beginning stages of COVID when I figured, I might as well come out of this time having learned something new, because we were all, I was in Chicago. We were all stuck inside here, and took a blockchain course on Udemy. And that really like opened up my eyes, man. Because for me to buy into something, like, I'd need to fully understand it. And I'd had friends tell me about Bitcoin, and I was like, I had my buddy is telling me back when it was like, I think it was like 10,000. He's like, it's going to 1 million. I was like, you take your magic internet money somewhere else, brother. And but I took the course, and I was like, oh man, like, once I understood blockchain, Bitcoin, Ethereum, that was kind of that light bulb moment for me. And then I just started, man, outside of work, like every night, just trying to learn as much as I possibly could. But I kind of ran into the same thing you were just talking about, which is like a lot of this was speculative. You saw these crazy valuations, and it's like the whole promise was, well, this is the future of finance. And it's like, okay, but like, why is this layer one, a $10 billion market cap? I don't really understand, just because it's like the future. Like it was hard for me to understand the value accrual to the token to that extent. So I was looking for things that like made more sense, like real world applications. And that's where I came across Helium. And that, to me, I was like, okay, this makes a little bit more sense. Like, you're deploying hardware, you're building out this network, you're getting tokens for it. Like, okay, I can get on board with that. And I was like, so how does the value get accrued to the token? And they had this, burn and mint equilibrium, where percentage of the revenue was buying tokens in the open market and then burning them out of the supply. I'm like, okay, now I can kind of, connect the dots here. That makes sense. I will say though, like compared to the revenue is generating, like the valuations got crazy as that last market cycle right after COVID, right? There's just like, you have to think everyone was kind of sitting around, couldn't spend money. Everyone got all these checks sent to them. They're looking to freaking be full degens on anything they could find. And I think we just saw money piling into crazy stuff. So Helium is kind of how I got my feet wet into DePin. Just because I was like, hey, this is something that can make sense to the masses, and it is an actual real world use case. And then from there, I just started kind of wrapping my head around the space, because we saw a lot of new projects come in. Look, let's be real though, like a lot of them aren't good projects, like you have to kind of do the research, I think, to find the good ones. And
for sure.
And there's a number of parameters I look at for that, but there are some in this. And actually, like, for this conversation, I'd like to kind of piece it together, because there's a lot of overlap. And they all have like their own use case that I think is going to take us from where we are now to physical AI, where you have, think about physical AI, putting AI in physical bodies, whether that's self-driving vehicles, whether that's robots themselves, humanoid robots or drones. I think the entire stack from where we are to that point, there's a lot of projects that are going to play a big role there, in my opinion, in DePin, that the timing is like perfect for all of this.
So what was it, while we're on Helium, what was it that caught you about this? Because this is a project that if someone's a little bit in DePin, they've heard about this, and we can get into some of the newer ones and things like that. But kind of explain to us just Helium, because this is a blueprint I think a lot of projects kind of use. How did Helium work? How does Helium work? Where has it went from the time you got involved with it to where it is now?
Yeah, no, and it's a good one to start with because all like the base layer for everything needs connectivity, right? So that's kind of how I look at Helium. So Helium first started out, I mean, they were around before they were in crypto, right? It was a normal business, and they were trying to build an IoT network. And kind of build out this decentralized, ubiquitous network where IoT devices could seamlessly connect very cheaply. And they decided, well, why don't we try to do this with tokens and see if it takes off? And sure enough, it worked out a lot better than I think they anticipated. Basically, the whole concept was like, yeah, you get their hardware, you plug it in, it's connected to your internet. It's participating in this mesh network where you connect with other hardware hotspots and create this network that IoT devices can just seamlessly connect to, and you earn tokens for doing so. And that token is basically the economy behind the network. So it has real utility tied to the actual revenue it drives. It was a really very cool concept, and I'd say it worked. They went from, was it like 17,000 hotspots up to about a million.
Wow.
Within an 18-month period, amongst like supply chain shortages. I mean, this is like in the the middle of COVID. I think that you could argue they could have had a lot more. So I think they did a really good job in proving out, hey, if you give people tokens, they'll set up hardware. So that was kind of like the beginning stages. But then the big problem came that they weren't driving enough revenue. And people in crypto have pretty short time frames.
Yeah.
And their expectations are crazy. You think about most startups, like it can be years before they turn a profit, and the problem for Helium was like, hey, well, we need to build out the network first, and then we can get devices to use the network. That was one of the problems. Other fundamental issue is that they're charging like such a small amount for these IoT devices to connect. They would need, I mean, to justify the market cap they got to, the amount of devices they'd have to connect was just like unfathomable. Like it wasn't possible.
Oh, wow. And I didn't realize they got up to over $5 billion market cap.
Yeah. Dang. I mean, what's funny about that? When they hit 5 billion market cap, I think their revenue was like under 10,000 a year. It's like crazy at the time. So, there's different iterations, and where they are today compared to then is drastically different. That big run up there was partly Sam Bankman-Fried. Alameda Research took a big stake in them. I remember their token like pumped overnight one time, like it was absurd. So I think they came to the realization that like the IoT network's never going to drive enough revenue, and they started to pivot in the sense that they added an additional path to revenue, and that was working in like the 5G space and what is now really Wi-Fi offload. So they're working now a completely different side of their network that's really driving all of their revenue. They're working with the likes of AT&T and some of these telecoms. They are expanding now into Brazil, into Mexico. And the function they serve is, you look at these telecoms building out their network coverage. They have to build out these towers. It's very expensive for them, but the big problem for them is like if you go inside physical locations in the buildings, in a lot of cases you don't have great service, and there's not much they can do about that, frankly. I mean, the towers they can build for outside connectivity, but once you get inside certain buildings, There's just not many solutions. And that's where they're teaming up with Helium. So Helium with their hardware enables you to, say you're at a business, you can set up that hardware, connect it to your internet, and someone that is an AT&T customer, when they walk into your building, they will automatically roam onto your Wi-Fi offload to maintain that good connection. It's seamless for the customer, much better experience for them. And it allows AT&T and these other telecoms to get good connectivity. They're willing to pay money for that, right? So that's where Helium's generating a lot of their revenue today, is by expanding coverage inside of these areas that these telecoms wouldn't have otherwise.
Right. Yeah, that's what's so cool about it, is this is stuff that's actually being used today already. When we were at ETH Denver, where you and I actually met, when we were at ETH Denver, I had no cell service, service. Okay. And Empress actually has one of their mobile plans that I didn't even know they had. And that I think she was paying like $5 a month for it or something like that. And she was making, had connection and everything, and was able to call and stuff like that. And then also I was watching a finance YouTuber I like named Meet Kevin. He did an ad one time for Helium Mobile, which was same logo and everything. So I'm guessing it's the same company. But then I seen them bridging off to, talking to just general people, right? There was no mention of a token, no mention of crypto, no mention of any of that, right? And so it's just really cool to see from this bridge from going to all speculation to actual use case. And they're partnered with AT&T, right? This isn't meant to be a promo about Helium or anything. What it's meant to be is to show how DePin and this entire sector that we're looking at here has passed to actual revenue and actual use cases, right? And I think it's very, very intriguing when we take a look at it. And so going forward, what are some of the largest opportunities that you see in DePin right now? And you can take this wherever you want. If you want to take this to individual projects or just use cases in general, right? Helium is doing mobile connectivity, but what else do you see that in this wake of artificial intelligence and all the power and data that we need, where DePin can not just be a narrative anymore, but could actually be a real sector within the economy?
Yeah, no, it's a good question. I mean, I think we'll start with Helium a little bit here. So you notice the chart is still down, right? I think Helium was a pioneer in this space in the sense that they had to do a lot of trial and error. They had to step on some landmines along the way that these other projects have been able to learn from. I mentioned the IoT side of things. I mean, they had to expend a lot of tokens early on to find that product market fit, which they've now found. They're over 20 million a year in ARR and growing quickly. So one of the problems for them is that they had all those early emissions that they're still offsetting. So, years of emissions trying to find product market fit. It's not like all of a sudden the revenues kicks in. They're like, oh, hey, forget the last 3 years. It's like, well, now there's a lot of dilution that has to be offset and burned out. And I think they're already starting to turn a corner, in my opinion. Daba is another one that's about to launch. They're based out of India, another connectivity one,
what's it called?
Daba Network. They're about to have their TGE. That one too, it's one to keep an eye on. After the TGs I'm seeing in these conditions though, it's worth probably waiting, a few days after TGE, because people are probably going to sell their tokens, right off the bat. You might find some good entry points potentially, but they're building out kind of what Helium's doing, but they're building out broadband for India. There's 1.4 billion people in their population, and they don't have a lot of broadband built out there. So that's what they're working with local companies there to install broadband connectivity across the country. But both of those are kind of I look at it as kind of a layer zero, right? Where now that you have that connectivity, you can put other projects on top of it. So let's just go down this path a little bit. So you talk about where we are today to getting to physical AI. One of the big stories that we're starting to see is that data is starting to hit this this wall, if you will, right? We've used most of the publicly available data, particular text data, to train models that's available out there. And now we're to the point where we've used most of that data. And the question is, like, where do we go from here? Because all of these models are very data hungry. And it's kind of this problem that a lot of people are looking to solve. NVIDIA is actually creating synthetic data now, like creating data using AI to train models because they can't get enough real world data.
Synthetic data.
Synthetic data. Oh yeah, that's gonna be if you watch any of NVIDIA's recent presentations, there's a lot of talk about synthetic data because they're like, hey, we don't have enough data to continue training these models. We're gonna end up hitting a wall on advancing these models. Like, we need more training data.
Sounds scary, synthetic data.
Well, it is to an extent, but also I actually think it opens up the door for more players to enter, because you can't train on synthetic data alone. You still need a ground, like the source of truth, where if you're only training on real world data, I think, frankly, Tesla would have a monopoly, man. Like, they have hundreds of millions of hours of video data collected from their vehicles.
Yeah.
And they've got some serious moats, man. So I think by adding synthetic data into the mix, you can then be a lot more particular about the real world data you actually need. And, as opposed to having to have the massive amount of real world data to train on, now I think a lot more players can enter because it kind of lowers that barrier. You don't need as much real world data. It's still incredibly important. But I think it brings a lot more buyers into the market. And of course, that brings me to a few projects, which, you look at, how do you collect more data? What's on the internet is one thing, but for robotics to function in the world, they need to understand the world. It's not like they can look at the world like we do and comprehend things and adjust. Like, they need a map. And I start thinking about this all the time now when I'm out and about. Like, every interaction you have, just walking down the street, if you're driving, someone pulls out in front of you. This is all real world data that we're not collecting today. Those are all experiences we have. We need to collect more of that, right? More of that real world data. There are a few projects that are doing this, and DePin's like really perfect for this use case, because you can give tokens to people and they'll go out and what they're doing every day anyway, and now collect that data, right, in their everyday lives. So 375 AI is one. I'm actually doing some contracting work for them. Let me I can pull up this. Let me pull up their X page here. Let me see.
Yeah, let me share it, because I'm not sure how it'll work with the overlay, but give me just a second and let me go to, dude, this pisses me off that it's not looking good.
All good.
Yeah, hold on just a second. Let me go to it. What is it? A30? How do you say it?
375 AI.
All right, and let's start fresh so that there's a good clip for it.
There it is, right there with the yellow. Yeah. So this is one project I'm working directly with, and they are collecting real world data. They have an in with Outfront Media that has 50,000 billboards across the country, and they're installing 6 cameras with NVIDIA chips at the edge. So they're collecting foot traffic, vehicle traffic, in the real world, and then they're able to process that right away. So, edge processing using AI to be able to take out the things that are useful. So I'll give you one example of this. Like, quant traders, or just traders in general, a lot of them are using AI modeling, right, for their trading strategy. Imagine, because they're putting cameras on these billboards, right, near ports. So imagine, instead of having to wait for GDP numbers that are then revised down, or the reports from the government, what if now you can see in real time, hey, the amount of traffic coming in and out of ports from these truckers is down 15% in the last week, right? You can start plugging real world data into your models right away and get an edge over everything else, because
we need a camera on the Strait of Hormuz right now.
For real, though. For real. And at the other end of it, though, they're also taking this data, and this data now can be used to train models. because you think about like self-driving vehicles, they need to be trained on the real world, but they also need to be trained on edge cases. If someone pulls out in front of you, if there's a cop that's blocked off the road, if the construction is blocked off the road, like these are all edge cases that have to be trained on.
Right.
This requires real world data. So, 375 AI is collecting all of this real world data in high traffic areas. And their team, like their CEO, he was the CEO of Linksys for a couple of years. He's had several very successful startups and exits selling data. So massive opportunity here, in my opinion, and like $5 million market cap, which has kind of been insane. Yeah.
Here's an example of it. I don't know if you can see my screen, but maybe we can give the people just a little second to listen to this.
Built a layer of data intelligence about what's happening in the real world on the premise that AI models, robotics, etc., know everything and have read everything and will read everything that's ever written or said or videoed, but they know very, very little about what's actually happening right here and now in any given place at any given time. And that sensor information is incredibly important, and that's what we've been rolling out.
For these models to reach.
Wow.
Yeah.
That's awesome. That's awesome. Wow. Okay, hold on. Let's go take a look at them right here. Are they on CMC? Do you know?
Oh yeah. You probably put a space in there, 375 AI, or if you it's EAT token, but it should
EAT. Okay, we'll find it. It should be down here.
Well, I don't know if it. Oh, there it is. Yep. So they just
$5.36 million market cap. And this is the all-time chart, guys. Now, this is the all-time since it was listed on CMC. So I don't know what it looks like.
They just had their TGE right in October, after October 10th, the big crash.
Oh, so, cool. So this is October 28th. Listed. Wow, it was listed on Bybit?
Yeah.
Wow.
Yeah.
Let's go look and see if it's on
our Kraken as well.
For Blowfin. Really? It's on Kraken? Oh, come on. I got to talk to Blowfin. We got to get this.
We got Blowfin as well.
Yeah, man. They've been a great partner of the channel. But wow. Yeah, look at this. Bybit, Qcoin, Mexi, BingX, Kraken.
Mm-hmm.
And it's a 5 million market cap.
Mm-hmm. Yeah, their goal is to get into 9 figures in revenue. And their CEO's done this. He's built other businesses that sold data at 9 figures in revenue. So I have a heavy bag here, not financial advice, but you can find these gems in these time periods like this where things can be, in my opinion, undervalued. Of course, it depends on your risk tolerance, right? I mean, these are startups still, but to me, I look for, okay, what's the total addressable market? Do they have a team that can execute? And what do the tokenomics look like? The other thing that's very attractive is that they don't start unlocking tokens to their team and investors until October of this year, and it's a 3-year vest. So there's not like heavy dilution that you have to worry about.
Yeah, we can see that right here, guys.
Mm-hmm.
You see, it's just the only thing going up is community rewards right now.
Mm-hmm.
It looks like. And then here is the team and stuff. And so if hypothetically we bottom, BTC bottoms, let's say September, October, and we start heating up, say we even heat up in like March, there hasn't been a lot of inflation there.
Exactly.
And, the period of inflation here looks like it would happen throughout a bull market, which is good. I think, because there's a lot of interest coming in to offset any potential selling pressure and things. But no, this is definitely a gem. So, okay, let's, I like this. I like this a lot. Let's talk about it some more. So 375 AI, we just looked about how they have cameras all over the place. They're gathering all this real world instantaneous data essentially. But how does the token come into the mix? And as an investor, how do you look at if it's something good to potentially buy, other than it's just 5 million market cap? Like, explain that process of how the token ties into the entire camera system and the actual use case behind it.
And in this case, they're set up that I believe it's 80% of the revenue would be buying the token in the open market, and then that is basically vaulted away, so they can use for either future growth, or they can use it for like a staking program for like kind of a dividend, right, to stakers. So there is, the revenue is creating buy pressure on the token. So that is, to me, like that's super key with all these projects. Like there are certain DePin projects, like they kind of operate their token separately from their business. We see, actually, it's not just DePin. We see this in a lot of crypto, man. I mean, you and I talked about this when we were in Denver. Like some of these projects have great use cases, but like, why do they even have a token?
Right.
Like, and that, so I think,
Ondo, for instance,
I was gonna say it, you said it, but yeah, Ondo is a great example where like they are tied in. I mean, I think Chainlink's kind of similar, right? Where it's like a lot of these are tied into a lot of real world use cases, but like where's the token connects to the fundamentals,
right?
And you have to remember too, these projects is not like a traditional security where if you own stock, you have ownership rights. If they were to get acquired, for example, or if there's bankruptcy filings, normally you're like last in line to get paid out, but like you have protections you don't have in crypto with being a token holder. So there has to be a fundamental connection. I think, having revenue flow into the token, that's bringing outside revenue outside of your ecosystem. And that's been a big problem with cryptos. You see the, money rotate from one to the next to the next. This is bringing, buyers, Web 2 buyers of that data, that's bringing their money into the ecosystem to buy that token. Like that's a huge distinction to make. And yeah, things that, again, I look for, tokenomics are important. We already touched on unlock schedule, how much dilution is coming up, and is there a fundamental connection to the token? Total addressable market, which is massive in this case. You look at the need for real world data, we're just getting started with the move to physical AI. So we're kind of ahead of that trend, in my opinion. They've got the team that can execute. And I don't know, man, like there's some serious moats for them. If they've been in an exclusive partnership with this company that has 50,000 billboards and they get cameras on all these billboards, they're the only ones that have that data set. No one else has that data. So moats are super important. So that's why for me, like, this is like in these down periods is when I accumulate. If I find a hidden gem that hits on all the things I look for, I accumulate heavily. I did that in the last bear market too. And I think for me, it's quality over quantity 100%. Like people spread themselves out too much.
I agree.
And this is one that I've been accumulating pretty heavily. And I actually recently took on an actual official role with them on a consulting basis. So super excited, man.
Yeah, man, I see you posting about going to take pictures of, target shells and things like that. But yeah, this is cool. Why 375 AI? 375 AI is pioneering data collection with AI-driven edge intelligence. Our decentralized network delivers real-time insights with a focus on privacy. Join us to earn rewards and help build a smarter, more connected world. So basically, explaining 375 AI, trying to get as much data as possible, whether that's hold on one second. I got a True Social notification. I was like, oh my gosh, what's going on? But
you never know.
Explaining 375 AI. So they've got cameras all over the place. They're trying to get as much of that real world data as possible. And then that token goes into rewarding people who are able to collect this data, such as you going to Target, taking pictures of the shelves and the pricing of things. And then on the flip side, they have customers on the business side that pay to acquire this data. And then 80% of the revenue goes back into token buybacks. So do I have a pretty good understanding of it?
Yep. That's right. Yeah. And you mentioned the app. That's another revenue source for them. So they've been running this beta. It's going quite well. They're running with Target right now. One of the big problems for a lot of these large companies that have product in a Target or in a Walmart is they don't know if it's stocked on shelves. And for some products, if it's like candy, if it's sodas, as much as 40% of their revenue comes from impulse buying at the checkout aisle.
Right.
So they, in many cases, will send people and spend a lot of money on this to go out and take pictures in these locations to verify stuff's on the shelf. That's what they're doing with their app. Is they're giving tokens to people to go out and take these pictures. So if you're at a Target, you're shopping, might as well take some pictures and make some money, man. So,
right.
And they've got some big things they're working on there. So with some, if you watch the CEO interviews he's done recently, they got some big brands. I mean, they're a very well connected team. You know, this guy Harry, all these guys have worked together over the years. And they don't need to be working, but this is a passion project for them where he just constructed his best people he's worked with throughout his career into this team. That's why I started working on them like 6 months ago. I've been offered a lot of jobs with these different projects. I've turned them down. I started reaching out to him. I was like, hey, if you guys have a consulting role, man, let me know. Started kind of chipping away and then got that done recently. So very exciting.
Cool. Yeah, this is Harry right here, guys, co-founder and CEO. This is what the team looks like. A pretty good, well-connected team.
Michael actually was responsible for the token launch for Akash. They ran that up to a few $100 million market cap. Right.
Yeah.
Nico is one working on the app. Like all these guys are this is an A+ team, man. It's freaking nuts. That's why I wanted to work with them.
Yeah. No, it really sounds like it. Let me come over here and look at why doesn't it come up? Golly.
There's two others too I want to talk about on the data collection side, at least touch on. And then I do want to talk about the compute side of things because I think that's really, really important to talk about.
Yeah, let's go.
Hive Mapper is one that they are also collecting real world data, but in motion. So you can put a camera on your windshield, collect data, and get compensated in the token. So they have like Volkswagen's buying their data to train their self-driving vehicles. They have Lyft buying data. Basically, any company that wants to create like a fresher map and have more like up-to-date street level imagery, their token's way down. You know, they were an example of a project that had a lot of dilution early on. The dilution's out of the way though now. So you start thinking about the fact they have customers that are buying, right? So they have revenue coming through the door. They have cameras that are already built. So they raised a lot of capital. Hardware is already built. They're just trying to get them in the hands of people and expand the data collection side of things. And I think having the dilution out of the way, you know, once they find a bottom, and maybe they have, I don't know, but I think there could be a resurgence there potentially. So it's worth mentioning. But another one that's collecting real world data with real buyers. Another one's Rover, ROVR, and they're collecting LiDAR data. So
that's a recent one, right? Aren't they fairly?
Yeah, their TGU was about a year ago. Their market cap's sitting at like 600,000 maybe.
I must be thinking of a different one then. 600K.
I think so. ROVR. Their market cap's super low, so they're collecting LiDAR. You know, you think about Waymo. When you see the Waymo vehicles, that's what they're doing. LiDAR is a laser-based technology. So it basically sends out a laser, it returns, sends out another laser, returns, and it creates like a 3D model, basically, of these cities. And that's really important data for self-driving vehicle, training self-driving vehicle models. So they're doing it using a DePin model as opposed to Waymo, who, you know, their cars are very expensive. They kind of do one city at a time. I see them around Chicago now. Rover's doing this in a decentralized way using tokens, and they're, you know, scaling up their data collection. So that's another one that's really interesting, super low cap.
And do those two projects you're talking about, do they have the same type of buyback mechanism that 375 AI has?
So Rover's a little bit different, actually. 80% of Rover's revenue is used for buybacks. 60% is buying the Rover token, and those are then burned out of the supply. So a little bit different. 20% goes to GeoNet. This is a project we'll talk about here in a minute because it connects to the GeoNet network to verify the location of where the data is being collected. So it's basically their data collection is then connecting to another DePin network. So they're not only collecting the data, the LiDAR data, but it's also when you get that data collection, you know, that very very precisely where that location was, where the data was collected. It's very incredibly valuable, man. Like, but I'll talk more about GeoNet in a minute. But yeah, I think all three of those are interesting plays, and they're all revolve around data collection. I want to say like HiMapper is probably around a 12 million market cap right now. At one point it was a few hundred million. So very low cap, right on the beginning of this move to physical AI. That's what everyone's talking about. Jensen Huang's talking about it. All the smart money's talking about the move to physical AI. This real world data is going to be the bottleneck. That's why they're looking at synthetic data, but they still need real world data.
Right.
Like,
And if you think about the opportunity in that, I mean, this AI wave of needing real world data is obviously going to be huge. And if you go back and just look at how much people would pay for email list, you know, you look at all these social media companies that have sold your data over the years, you know, they're not selling much. Maybe a phone number, an email, a name, you know, that's very limited data, right? In terms of what these DePin projects are being able to offer. And I think whenever I look at it, you know, I'm starting to understand it more. So we have a problem, or not a problem, but, you know, cryptos are not securities. Securities are stocks. Securities are regulated in a totally different manner. And we do not want that in crypto, right? But I think that this is the perfect, I don't want to call it a loophole because that almost seems like a bad thing. But I think this is the best structure that I've seen yet in crypto, where there's an underlying company, and then they have a guarantee or an agreement in their, you know, white paper that, hey, said company will purchase set amount of tokens from the company's revenue, right? And so it's almost like being a shareholder, right? Or being a proxy shareholder in a sense. And I think that kind of helps us go full circle from the speculation and nothing burgers to actual kind of a stake in the company, or a piece of ownership. Because yeah, like I've said it multiple times on stream about things like Ondo, you know, I was extremely bullish on them, tokenizing real world assets, and I would love to own part of Ondo Foundation if I could, you know. But the fact of the matter is nobody cares about governance.
No,
you know, people want to make money off these businesses succeeding. And so I think the key in DePin, when people are doing their own research, is to, one, find an underlying company that you think will be successful, one that they're solving a real world use case, and they have a business model that will generate revenue. And then once you find that, look at the tie between said company and the tokenomics. You know, are there buybacks or are there not? Is it just a governance token? If it is, then it really doesn't matter how good the underlying company is.
that's right.
And then if there is that, take a look at the tokenomics and see, you know, what the dilution's like, when the unlocks are, what percentage is allocated to the team, to see if you're just going to be exit liquidity or if you're actually able to get a meaningful stake into, you know, the underlying company. So I think this is really interesting. And I think this is a pivot to something that obviously we need decentralized artificial intelligence, in my opinion, but that this wave of information that we need, you know, to train all these models, like you said, and just to be able to have this real-time update is extremely valuable, a lot more valuable than any email addresses or anything like that. Is there any, do you know, on like the stock side of things, are there companies that are working on doing this that aren't in the Web3 space as much, or do you think that it's a guaranteed win that the DePin sector is going to be in the Web3 space?
I mean, Google's doing it with Waymo, right? Like they have cars out collecting LiDAR data, right? They're doing it in a centralized way. The power behind DePin, though, is that you can basically crowdsource participation and scale it faster. And instead of having the CapEx be taken on by the company, the CapEx is taken on by the individuals in return for tokens. You know, that's why, again, though, the the fundamental connection between the revenue and the tokens is necessary, right? I think we've seen some projects in the past try to pull the wool over people's eyes a bit to say, hey, here's this token, this shiny little token, get us what we want. We run the business over here. And, the token is going to freaking go to zero. They know that, but people don't know that, right? So I think that last part you talked about is super key. And that's what we're getting. I think the maturation of DePin is taking place, whereas a lot of people, I think, still have this concept from the last market cycle that, well, yeah, you plug in this box, you get tokens, there's no revenue, there's no customers. And that was the case. But now we've gotten to a point where it's like, hey, not only are there customers and revenue, but the actual problem at this point for some of these projects is like they need more participation. They have more demand for their data or more demand for their network than they have coverage. And it's been like a complete 180 from what we saw in the past. And I think the last part is like that finding that way to connect the revenue to the token in a way that drives real value. And that's what's kind of being figured out right now. There's some different approaches being taken, but I think as long as there's a connection there, as the market recovers, I think some of these do quite well, Yeah. And so we talked about kind of like the Helium DAO as the base connectivity layer, and we talked about the data collection, the training the models. HiveMapper, by the way, their new dash cam uses Helium for you can put a Helium SIM card in, so it uploads the data right away. So you talk about, you've seen the connection here, the layer 0 connection, the device is collecting the data. Now, though, you have the data, but you need to train this stuff. And this is a big topic this year, and I think it's very timely. The AI data centers, the GPU, the compute resources, like how is that going to happen? Because what we're seeing, there's a lot converging and a lot of catalysts that are coming together. And TAO is one I know you're a big fan of. There's a huge story to tell right now. And I think that's
a good trade.
In a good trade. I know you're like, if I shorted all that money, I'm just buying long positions on it.
Man, no, I'm a big fan of TAO, but yeah.
Yeah, like, look, so I just want to kind of paint this picture for the forces that are converging, because we saw these decentralized compute projects make a big run in 2024. And that was because there's GPU shortages. People couldn't get their hands on the NVIDIA chips. So we saw a massive run up, and a lot of them didn't even have revenue yet. And some of them hit, hundreds of millions of dollars in market cap. What we're seeing right now is a little bit of a different story, but similar setup. And that is that the grid cannot handle these freaking AI data centers, bro. Like, you're already seeing the reports in the last week or two that roughly 50% of the announced AI data centers are either delayed or being canceled. Part of it's the grid issues. Part of it is red tape in these communities going to their meetings and saying, we don't want this AI data center near us. And that's going to hinder a lot of these AI data centers being built out. And it's not a problem that's easy to solve, man. Like, nuclear takes years.
Yeah.
Okay. Solar is fine, but you need better battery technology, frankly, if you want to scale that to where it needs to be, because the demand that's going to be necessary on electricity is beyond what people can imagine. And then you have natural gas, but we're going to see turbine shortages. We're already seeing that. So there's not really a great solution for it. So what happens when our GDP growth, which has been completely reliant on AI CapEx, frankly, if these can't get turned on, no, all of a sudden we have shortage of compute resources. Well, there's a pretty good story to tell there about tapping into these decentralized compute protocols. The other thing we see right now, and I think it's been highlighted from this Iran situation, is that these data centers, in particular in the Middle East, can now be targets in war. That's a huge freaking
they're
problem.
doing it.
They're doing it.
Yeah.
And I think, if anything, that highlights the fact that the bottleneck for these GPUs is a concern. You have NVIDIA is the big one, right? But they outsource all their manufacturing to TSMC in Taiwan. Taiwan and TSMC makes all the chips that we rely on.
Yeah. China over there licking their chops too.
100%.
Yeah.
And if that were to ever be disrupted, I mean, you wouldn't see a smartphone for like 2 years, by the way. But AI build-outs and the advancement of AI it'd be catastrophic for our global economy. Yeah. But you take a step back from there, even ASML is the only company in the world out of the Netherlands that can make the machines TSMC uses. So literally our entire supply chain of microchips is based on 2 companies. You have ASML out of the Netherlands that makes machines. TSMC uses those machines to build the chips. So I think this Iran situation just highlights like how this supply chain is a concern, right? And even if things go smoothly, you still have the energy constraints. Now you add the fact that Jensen Huang's out here talking about how decentralized compute is going to be a big factor. You have Treasury Secretary Scott Bessent posted in August that we need to use decentralized compute using blockchain technology. The stars are aligning, man. And I think for something like TAO, Akash is another one I'll bring up, token AKT. They've been around for some time. I recently interviewed their founder, but same concept, right? Where instead of relying on a centralized entity and a centralized data center, you can source GPUs through the cloud. So individuals like you and me, if you have GPUs, you can rent out your capacity when it would be sitting idle. Companies that have data centers, maybe they use 20% of their compute. They can rent out the other part of their compute when that they're not using, becomes a revenue source. These protocols become like the Uber or Lyft for compute resources.
Right.
So the people that need them, they don't want to turn to AWS and pay an arm and a leg with crazy contract terms if they can even get access.
Right.
They can go and get compute access immediately through a decentralized provider. And I'd say the last part of this that is worth touching on is that the technological breakthroughs we're seeing are going to be huge for this, because to this point, if you really want to train models, sophisticated models, you want to have all the GPUs in one spot, right? In one data center. And it has to be homogeneous. You want to use, if you're training on H100s, you want all of them to be H100s. And this is something that's changing. And we're seeing this in the TAO ecosystem even. There are some big breakthroughs coming where you can train with different GPUs, H100s, A100s. You can kind of cluster different hardware into one cluster to train. So you no longer have to worry about the homogeneous issue. Mm-hmm. The other is that you can source GPUs from different places. So in one part of the city, there's GPUs here. You can combine them virtually with other GPUs in a different location to train. These are things that are being worked on diligently that I think we will see breakthroughs in. And decentralized compute is going to be able to take on a lot more workloads soon. So I think we're going to see potentially some huge run-ups in some of these projects. Nosana is another one built on Solana. TAO, I think some of these subnets on TAO, we could see some big runs on, man. So Akash, by the way, just introduced a burn and mint equilibrium. So you talk about the utility. They have revenue buying tokens and burning them, like the other projects we talked about. So they recently introduced that. And I think they're primed for another bounce back. I mean, you look at some of the early price action we saw, guys. That was before they really had revenue,
right?
That 2024 run was based on a story about GPU shortages. So you think about the story we just told and what's coming with the grid constraints, and then the fact that they actually have revenue and usage. And I think a lot of these, you can't really ignore this GPU sector, decentralized compute sector, and TAO's kind of leading the way.
Man, I agree. I think that, this back here was speculation, right? Mm-hmm. But now we're to the point where it's just let's just use this analogy, like a Silicon Valley company that's been burning money for a long time, trying to build something, but now one of the few that succeeded. And I think a lot of people are going to overlook the DePin sector until it's too late and in hindsight be obvious. Because when we're looking at something like this, that it is at the, its high in 2021 was about 400 million market cap, 450 million market cap. Then up here, it hit 1.4 billion market cap. But I don't know this for certain, but it wouldn't surprise me if there's more users today than there was back in March of 2024, Mm-hmm. And then when we're talking about this shortage and we're over here on the website, not only is this a means to get around a shortage, it's also just financially literate. If you take a look at it right here, this is a H200 chip. You can rent it through Akash for $2.90 an hour. CoreWeave is for $4 more than that. Amazon Web Service is over $2 more than that. Cloud is over 3 times that. And you can see, you can get the different amount that you want, the different power of chip, the different models of chips. And, you know, I think this is huge. I mean, and especially when you look at the upfront cost of some of this, man. I went and bought this of RAM. I still haven't even installed it. Okay. This is, what is it? Is this 36 or whatever? You know, 2 RAM sticks, right? And I bought it about 6 months ago. I paid $400 for this. I looked the other day, the same link that I bought this from on Amazon is $1,200 right now. Okay. And so there's a huge, huge shortage. Now, I'm not getting in the business of flipping those. I need to install them. But my point is that there's a huge upfront cost, you know? And then what if somebody does all this upfront cost and it doesn't end up working out, or they decide to pivot business models? You know, we've seen that a lot with companies that went all into mining Bitcoin. And now they're like, okay, well, maybe this isn't going to work out. And so now they're pivoting to, you know, using that compute power for artificial intelligence. But I think this is a huge real world asset, essentially. Like people don't really bridge it with real world assets as much. But I mean, look at this. Train 3 times longer. H100s for $1.33 an hour versus AWS for $4 an hour. So taking this to the decentralized front is potentially a huge opportunity. And you touched on it a minute ago, but can you talk to me a little more? I know you interviewed the founder, which is really cool. Congrats. That's a big interview to get. That's awesome. I need to go watch it. But can you talk to me from the investment opportunity in a token for AKT? And if this website does really well with people coming in here and, you know, using these decentralized or renting them, how does that pivot to the AKT token?
Yeah, no, it's a good question. And one thing I will add is, like, they're running hackathons. So in San Francisco, they've got people, like hundreds of people lined out the door to participate in these hackathons, and they're all using Akash as the engine behind all the dev work they're doing in these hackathons. Wow. It's freaking nuts. The CEO is like on the ground floor with them. Like he says freaking electric. This came up in the interview with him, but he's like, look, in 2024, the GPU shortage alone, like, people had to use us. And the token utility at that time was you had to pay with the AKT token. He's like, you know what? People were willing to do it because they couldn't get access to compute. It's like, but the problem was, you know, once that eased up and people could get access to compute, they didn't want the headache of paying with AKT. They didn't want to deal with the crypto stuff, you know? And he said, so we focused on making it an easier user experience at that time. He's like, and unfortunately, the token took a hit because of that. He said they recently, just in the last month, by the way, introduced a burn and mint equilibrium. So this is new. So to give the token utility again, that is that same model, man. Like, revenue comes in, buys the token, burns it out of the supply. So they introduced that. They've already burned 100,000 AKT in the last like 3 weeks. You can see it on their dashboard there, and you know, their revenue growth trajectory is pretty wild, man. So they're seeing revenue move up in the right direction. They have a new form of utility for the token with the burn and mint equilibrium. And I think for me, it just seems like things are really coming together. Whereas in the past, like just speculative valuations, now you have real revenue, a real need, a good story to go with it in token utility.
Yeah. And looking at the tokenomics, it's already 75-ish or 68% in circulation. So a lot of the dilution's done. And something I always, or not done, but we're in a better place than now. And something I always like to show people is a lot of people like to look at raw price, guys. So what I'm showing you now is the all-time chart for Akash, okay? And if you're just to take this at face value, and this is a good lesson, if you take this at face value, you would say, wow, it hasn't made a new all-time high since 2021, which is true if you look at the raw token price, because here it reached $6 and back in 2021 it reached over 7. But the key to looking at anything that is inflationary is going to market cap. So you could see back here it was only 450 million market cap, which means there was a lot less supply out there in order to make the chart look like this of $7. However, at the point that it reached $6, a lot of that dilution had taken place. Okay, so there was a lot more tokens in circulation, and it actually did a 3x in terms of market cap. And so that's why I always recommend looking at these assets in terms of market cap, and then taking a look at the tokenomics to see how much further inflation do we have and what the onset of that is via taking a look at the tokenomics. And so that's their main thing now, is when revenue comes into this, a certain amount of it is bought and burned of the AKT token.
Correct. Yeah. So they just introduced this in the last few weeks. They've already burned 100,000 AKT tokens in that time. So that was his thing. He's like, look, we wanted to focus on the user experience. We wanted to keep our customer base. You know, the token unfortunately fell by the wayside there for a minute. He's like, but now we wanted to get the token utility back in. So the customer can go and pay with a credit card. They don't have to know crypto's there at all. On the back end, that revenue is still going, and they're using it to buy the token and burn the tokens.
That's awesome.
Yeah.
That's awesome. That's a good leader, I would say, a good founder, right? Because we talk a lot about the separation between, business and token, right? And if the business was kicking butt, he really didn't need to worry about the token, right? But it sounds like a couple years ago, they pivoted to focus on the business model, which was, how can we worry about our customers more, not the token investors, but the customers more, make them be able to pay with a credit card. They don't have to pay in AKT tokens. And that was obviously a strategic investment in the company. But now looking at it, it's brilliant, right? Like you said, obviously the token struggled. People didn't have to worry about getting AKT in order to utilize the platform. However, when you look at the percentage of people that are involved with cryptocurrency right now, globally, it's a lot less than people that have a credit card in their wallet, right? And so the potential customer base, you opened up, 100x. And then in return, it's very cool to hear that Akash came and made these changes to the buyback and actual burn. So actually getting rid of the token. Do you know what the percentage is? How much of revenue is used to buy back of the AKT token and burn?
Yeah, I have to look at the documentation again. I believe it's between 60 and 80%.
That's a lot.
Yeah, for sure. I mean, you got to think like, there's a couple of takeaways from this, right? For any project that's doing this, number one, these are high growth, early stage companies, basically.
Silicon Valley startups, man. That's what I was saying.
And so if you're using 80% for buybacks and burns, that's basically margin. So you can start doing PE ratios, because that 80% could be looked at as earnings. I mean, that's money that is not being reinvested or going to the pockets of the owners. I mean, that's buying tokens. The other is, it's like early stage stock buybacks, which you don't generally see. That is normally, a deflationary event. So you're both kind of converging, and then you can start looking at valuations. And that's one thing I want to touch on with GeoNet. One other honorable mention though is Nosana. If you want to pull that chart up real quick, they're also a decentralized compute protocol.
What's the ticker?
NOS. So they're built on Solana. Same type of deal. Yeah, it's them right there. So their market cap's way depressed from where it's been.
Okay, so this is Nosana, built on Solana, contract address M007, ended in that. Looks like they're 4 years old, so they've been OG project in terms of the crypto part. Market cap about 17 million. Fully diluted 24 million, which means there's approximately 70% circulating supply. Yeah, tell us about Nosana. What is it in the DePin sector?
So same, they're decentralized compute protocol. So kind of like what Akash is doing. When I talk about finding the plays in the bear market while the market's down. This is one that I went in on. I wish I'd gone in heavier, which this time around, this down period, I've been going in heavier on my conviction plays. But this is one that I found in October, November of 2023. And in a course of 3 months, just to show you how quickly these things can move. In 3 months, it did a 350x.
Wow.
So those are like the low caps. You can find things under 10 million that have a lot of potential, especially early stage. You can get some crazy returns. But I think this one is getting to a point now where it's looking pretty attractive again, because it's in that GPU, decentralized compute sector. They have real revenue. Market cap's down to just over 20 million. So another one worth keeping your eyes on for sure.
Yeah.
Been a runner in the past.
Definitely. And do they have the same type of tokenomics with the buyback, and burn and everything?
I believe so. Like I need to look into their documentation because I think they updated it recently. IONET recently updated their tokenomics to give more utility to their token as well. So that's one you could look at as well. But I think they're on a 30 million market cap. I think all of these though, with the decentralized compute, and with again, we're going to see more and more announcements hitting the headlines. These AI data centers that are going to be either delayed or canceled. I think we could see a big run on these compute projects. And the Tao ecosystem. I think some of those subnets, man, if you find the good ones, we could see some serious runners. We've already seen some, but I think that's one you have to keep an eye on.
Do you have any you like?
It's something I've been digging into. I've got a couple of people that are pretty well versed in the subnets that are analysts in the space that I'm waiting on. I'm waiting for them to give me some of the ones they like, so I can kind of narrow it down a little bit and dig in and do my research, because there's a lot of them. And I'll say, like, some of these, probably a lot of these in the long term might not make it, right? I mean,
of course, yeah.
But the ones that, if you find the ones that do, and even if you don't, like, I think, this summer into the next year, especially, like, I think we could see some huge runners in the subnets. Some of these are pretty low market cap. So
all low market cap, man. I mean, the highest market cap's like 130 million.
Mm-hmm.
And I talk to people that's been in the Tao ecosystem for years, and they're like, "Oh my gosh, it's so huge, man! Shoots is a huge market cap." And I'm like, "Dude, I've seen meme coins run to 4 billion. Like, I mean, this is nothing. You know what I mean? 132 million market cap for shoots, And so, yeah, it's really crazy when you're looking at the Bit Tensor ecosystem. It would not surprise me if we had a Solana type meme coin run on Bit Tensor Tau subnets. And the reason that it could be even larger than that is because it's limited to 128 subnets right now. And so if there's another subnet that comes online, the weakest one falls off. And so there's only 128. So if we get this mash run on Bit Tensor Tau and people really dive into the subnets, there's only 128 to choose from. You're not having the pump fund where you're having 128,000 tokens launched today, right? There's 128 of these. And it costs somewhere, it depends on the price of Tau on the day, but somewhere around 150,000 to launch a subnet. And so it's not something that any old person's just going to be able to go out there and open up, right? These are legit businesses that they're trying to open up in the Bit Tensor Tau subnet ecosystem. And so, yeah, this marriage between decentralized artificial intelligence and decentralized compute and DePin, I think it's just the perfect marriage. And I definitely 100% agree that this is the main narrative going forward, especially into next cycle over the next, say, from now to 4 years. And it's not just a narrative anymore. It's actual real use case. And so I'm extremely, extremely bullish on Tau, man.
I agree, man. I mean, so you kind of push this all together because there's two other protocols I do want to bring up. I know we're running a little over, but I don't know if you have the time.
Yeah. What are they? Let me know.
So I just want to kind of back through what we've talked about. So you have Helium, Dabla, kind of that baseline connectivity layer. Then you have the sensors collecting the data, as the next layer built on top of some of that connectivity. And then from there, you have the compute, right, that they can plug that data into to train the models. Now the next thing is like, okay, moving down that line to physical AI, we get the robots built. How do you get these models plugged in? Like, how do you make them useful in the real world? And that is, building out those maps, and that coordination layer of robots in the real world. And there's a couple of projects there. One is Auki Network, AUKI. They are based out of Hong Kong, and they're working with a lot of big robotics companies. They've launched their token like August of 2024, I want to say. So their token hasn't been around too long. What is it, 30 million market cap, something like that?
Yeah, so this is Auki token on base chain, currently a 7.4 million market cap, 59 million fully diluted, which means there's a lot of inflation coming up in the future. And yeah, but it's less than 10 million market cap, and it looks like it's been around about a year. So tell us about this. Tell us about Auki.
Yeah, so they are building out kind of the real world map for robots, and they have a product that's driving a lot of revenue today. So based out of Hong Kong, their CEO is like one of those go-getters, man. He's like freaking nonstop work, dude, grinder. I interviewed him as well, but they started out with a product called Cactus. So they're working with retail locations all over Europe. They also have 2 Fortune 500 companies in the US that are doing paid pilots with them. So it started out, you think about, there's really 3 main sensors they're kind of combining. One is your phone, which you can use to record video. You can open up their app, use it as like a navigation tool. The next is the smart glasses. So they've got open source smart glasses they're working with. And then the last is robots. So you think about a grocery store. Their Cactus product basically it enables employees to come in and use their phone, open up the app and use it as a guide. So it takes them around and do digital tasks in the store. So they'll say, hey, this shelf needs to be restocked, for example. So instead of having a 30-minute handoff with their boss in the morning, they just walk in, their boss left digital notes for them around. And if they're new on the job, it'll also guide them to where they need to go into the store to do their job.
Oh, wow.
And they're doing this now with smart glasses. So you throw on the smart glasses and it'll guide you where you need to go. And then you think about this, the robots need to be able to navigate that environment. And that's what they're working on right now, is deploying the robots. But your robot can see what you see. If you're wearing the smart glasses, all of a sudden you can have this connection with your robot. And what they're going to have next is really at night, it'll be kind of a night manager robot, if you will, that's running around the store, taking all these images that they're creating using something called Gaussian splits, or splats rather. It makes a 3D rendering of the whole store based on the data that's collecting. And it's going to be able to identify what needs to be restocked, what tasks need to be done. And the owners of these, you can see there, it's guiding them around the store.
Yeah.
The owners of these franchises are like, hey, one of the big benefits too is that people don't like being bossed around by their boss. They don't want to like being told what to do, but robots telling them what to do, they don't get angry.
Yeah.
It's like for employee morale. The other thing they're doing is hotspot detection. So they can see, they're running reports to show like this part of the shelf is where all the activity is happening, right? Where they can now take that type of data and for product placement purposes, right? Knowing where people's eyeballs are. So some very cool insights. They are already to the point, I think by June, where they will have more revenue coming in than their burn rate. They'll be profitable.
Wow.
As DePin project. So pretty cool stuff. That the stuff they're working on is pretty awesome, man. So definitely check them out. They're doing some pretty cool shit. So
yeah, no, this is really cool. Yeah, this is the Cactus thing. Wow.
Mm-hmm.
Yeah, that looks awesome. What was the other one?
GeoNet, and this is the one I want to finish up with. So
hold on. I gotta frame these for clips, bro. We gotta get our. What's the ticker?
GEOD.
D?
Yep. There it is.
Okay, this is GeoNet on Solana. Currently a 58 million market cap. Fully diluted 27. understand that necessarily.
Well,
That could be wrong though, but
CoinGecko sometimes is better.
yeah, you see what I mean? How it's back. Maybe it's backwards. Maybe that's what it is. But anyways, this is GeoNet, 58 mil market cap. Looks like they've been around 4 years, so they've been building a long time in the DePin sector. Tell us about this GeoNet.
So GeoNet to me is probably fundamentally the strongest project out there in DePin, in my opinion. So
in all of DePin?
I think so.
Wow.
Yeah, and I'll make my case for it. All right. So they're using something called RTK. When you connect to satellites, there's several global navigational satellite systems out there. GPS is the US version, right? Europe has Galileo. China has one. Russia has one. When you connect to GPS, so the US version, you connect to 4 satellites, 3 that triangulate your position and 1 that does the timing, so it can determine where you are on Earth. You can only get within a couple meters of accuracy. There's something called multipath. Sometimes you can bounce off of different surfaces, off of buildings, etc. You also have particles that can get in the way of the signal. For a lot of use cases, that's fine. But for certain use cases, like sending drones out to fly themselves, or autonomous vehicles, or if you're a construction worker doing a survey, you need a lot more precision than that.
Yeah, autonomous war. You don't want to be a couple meters off. Yeah.
Exactly. So what they've done is launch this network using something called RTK, or real-time kinematics. Essentially, you can put a hardware, this base station, down on your roof. It works with the satellites to correct for that margin of error, to where if you connect, you can get within a centimeter of accuracy and where your location is. So they have over 20,000 of these all over the world. If you go to their, actually, if you go to network at the top there, and look at the console map or usage map, either one. That's where they have coverage with these. They've used tokens to get people to set up these base stations all over the world.
Wow.
So yeah, if you zoom in on like Europe there.
Wow.
Europe and US, they're their 2 largest markets, and then Brazil and India are the next ones that are really blowing up right now.
Man, they don't got nothing here. Dang, yeah, they got coverage all over Europe and even US. They have really good coverage.
So a lot of farmers too. US Department of Agriculture is using this network, actually.
Wow.
So they basically, for all the people that are using the network, they pay, right? They pay for using this very precise location data. They grew from a year ago, 500,000 in ARR. They just hit 9 million in ARR. So 1,800% growth in revenue year over year. 80% of their revenue goes to buys and burns. So already 3% of their total supply is gone forever, burnt out of supply. Of 3.3% of their token supply is forever burnt. Actually, if you go to GeoNet console, if you just do a Google search, look at Blockworks.
This one?
No, let me see if I can find the link. GeoNet Blockworks. Here we go. I'll send you the link.
Blockworks?
Yeah.
Send me the link.
Yeah. I got you. I'll send it in our chat here.
In Telegram or on? Okay. No.
Right there. Yeah. Okay. So you can see here they have 5,823 cities with coverage. But their burn right here, tokens burning, this is from revenue. 80% of their revenue buys tokens and burns them out of supply. So you can see the trajectory they're on. The other part, though, this burn rate, just right of that, obviously they give out tokens for people that are participating that have base stations set up. You earn tokens. right now, if you look at that, was that 70 just recently? Was that 70%?
Yeah.
So
Over that, yeah, 73.
So of the new emissions going out, 73% of that is burned from revenue today. So they're offsetting, revenue's offsetting the emission rate by 73%. But
Wow.
the keep in mind, they have a halving event coming up to station owners at the end of June. So that the emissions will be cut in half. So they're going to be completely net deflationary by that point in a massive way. But the thing I really want to call your attention to is the fact that they're at 9 million in revenue. 80% of that is going to buys and burns. So that puts them at 7.2 million, say, on their earnings. So if you look at a PE ratio on this, take their 60 million market cap divided by their earnings, that their PE ratio is at just over 8. And this is a company that just had 1,800% growth in revenue. Right. So if you combine that, if you compare that to like a normal PE ratio for something that it would be considered high growth, 30 to 100x is generally what you see in a high growth company for PE. They're sitting at just over 8.
Right. Yeah.
And about to be net deflationary.
Yeah, it's definitely undervalued. Just to give some people some context, healthy growth 30 to 50, high growth and extremely high early stages, which is where I would put this. Right? Something that's new 100 plus PE ratio. So if you were just gonna say, even just use this 50 to 100, that's what, 7 to 14, 15 times undervalued.
Right.
If you were looking at it on a PDE ratio standpoint. Yeah. And a ton of coverage already. This is crazy. And so how exactly do they get this coverage?
People have their hardware they've installed on their roof to create coverage. So you get tokens for setting up their hardware.
Just for setting it up and leaving it there.
And here's what's great too, is that once they're at 21,000, over 21,000 miners, once they hit 20,000, they are able to address roughly 85% of their total addressable market. So their network's mature now. They don't need any more growth necessarily. They just need now to make sure they have over 99% uptime. So their goal now is to kind of get that final coverage where their customers need it, and then make sure that all the locations are just high quality locations, right? So they've made slight changes to their tokenomics over time to reward people that have really good setups to get any bad setups off the network, and just kind of that final stage of tinkering to make sure that they kind of iron out this perfect network, and focus on growth, revenue growth. And that's really where they've seen, again, 1,800% growth. They're at 9 million ARR right now. Expectation, the projections are 18 to 21 million at the end of this year. And then 2027, I think their goal is to hit around 35 to 40 million.
Wow. Yeah, this is a good one. Wow. No wonder you said it's your number one play. And have you interviewed them at all?
Oh yeah. I've had their CEO, Mike Horton, on a couple of different times.
Oh, okay, cool.
And remember at Rover, I mentioned the LiDAR collection. So their hardware on the vehicles connects to the GeoNet network, so you can get that centimeter level accuracy of the data collection. So 20% of Rover's revenue buys GOD tokens and burns them because they're using the network.
Very deflationary, a lot of deflationary pressure. And then that buyback doesn't slow down when the halving comes, right? I mean, it's just so that increases it even more. Yeah.
So that's the market's got to figure this out. And right now, I don't think it has. The halving event happens, the burn rate's going to exceed new tokens going out. So that's very deflationary. Now, if the price of the token goes up, right, that means less tokens are burned, right, for that amount of revenue. So eventually, I would have to think that the market will figure this out. And if the market figures that out, that means token appreciation. And these are ones that when the market's down like this, you can get a little undervalued. They started off with really no tier one exchanges, been mostly DEX volume. So I think that's why we haven't seen like any big, like huge moves up in their token price.
Right.
So I think that's a good thing for people that are looking for potential investments, right? Like those are the things I would look for, my personally, what I look for. So yeah, man, they're crushing it. And you think about this move to physical AI, we're going to have more drones out there. We're going to have more robots out there. They all need precise location data. So, you've got GeoNet for the outside world. You've got Aoki inside the retail locations, mapping that out. And you kind of put together this whole story. It's like, you've got the connectivity layer with Helium and Daba. You've got the data collection layer. You've got the data going into the compute layer to train. And then you've got that going into the real world maps with GeoNet and Aoki to make the robots work. It's kind of all interconnected.
Right. Yeah. No, this is definitely between DePin and DAI, I guess you could call it. I definitely think that's going to be 85% of my focus going into next cycle. And then the rest will be somehow a privacy thing. And then, because I do think privacy is important and things like that. But, we're so early to this, and we still need to see all the main institutional adoption, and once we get that, I really think we could see some crazy valuations, definitely one or two of them in the top 10 for sure. And, one thing I say with the decentralized AI is that we always look at crypto in a crypto bubble, right? And so seeing something go from Bittensor TAO, for instance, going from 45th in overall market cap to top 5, it's like, oh my gosh, that's impossible, but that's looking at it through a crypto lens. Like the last time we've seen something like that happen was with Solana, but like I said, that's looking at it through a crypto lens. However, if you look at who the customer base is, really, like with decentralized AI, it's trad AI, like TradFi, artificial intelligence, all of that money. When you look at the valuations of OpenAI, XAI, and all of those companies, and then from this perspective, you're looking at a totally different, like the customer that's pouring 80% of the buybacks doesn't even know anything potentially about the token, right?
Sure.
And that's the beauty of it is removing that connection. Crypto people can benefit from the entire world, the TradFi world, the farmers, whoever it is that needs to consume this data. And so I really think it's a huge opportunity, and that, people have to look at it not from a crypto bubble so much, because we're now to the point where we're opening up our customer base, or people who would, add into the token and increase the market cap, are completely outside of crypto and may not even know the token exists at all. So 100%. I definitely think this is a huge opportunity going forward, man. I'll tell you what, I learned a lot. I've got a lot of notes down here. We're going to have some good clips of some of these individual reviews, the 375 AI, Nasana, obviously Tau, Aki, GeoNet, and there will be some more, man. Those will start sprinkling out probably at the beginning of next week and stuff. We'll also clip this full interview up, cut out all the dead spots, and post it directly to YouTube and X as well for anyone that wasn't able to make the stream. But hey, bud, thank you very much for coming on. Is there any last words you have? Where to find you? What time you do your live streams? Any shows you do on X? And then if there's any last things about DePin you want to mention?
Sure, man. Yeah, like final words just overall, I would say the total market cap of crypto is like 2.44 trillion right now. We see gold move that in like 20 minutes. It's
on a Trump tweet.
It's important to kind of keep that in mind here. Like when you look at also some of the top like 50 projects, there's a lot of those I'd say that are market caps from the prior market cycle that, a lot of those will probably fall out. New projects are going to move in, and new capital's coming into the space, whether it's in DePin, whether it's Web2 customers, or whether it's the fact that 401ks are about to start getting access, $11 trillion. You have Morgan Stanley just launched a freaking Bitcoin ETF. Sailor's buying more Bitcoin on a daily basis than new Bitcoin mined.
Yeah.
You know, like we're still so early when you look at the market cap and all of the rails that are opening up for capital to fly in. Once things kind of turn around here, it can happen very quickly, man. And some of these projects we're talking about, I think they could be rising up the ranks as some of the old projects kind of get out of the way. Capital's got to go somewhere. So I think there's a lot to be optimistic about, in my opinion. As far as like things that it's ways to find me. So I try to do at least 3 live streams throughout the week. I generally do Monday, Wednesday, Friday, right around 3 p.m., 4 p.m. Eastern time, 3 p.m. Central time. But I do host spaces throughout the week. So 11 o'clock on Monday, or well, I guess noon Eastern time Monday, noon Eastern time on Tuesday, and the same time on Thursday. So host of 3 different spaces throughout the week, doing a lot of macro, a lot of DePin stuff. And yeah, do the live streams. I do a lot of founder interviews. I've got some more coming up here that are going to be some pretty solid ones. And yeah, on my channel, I just do a lot of deep dives, man. So a lot of similar stuff. I watched some of your stuff with like the macro analysis and like a lot of the stuff you talk about, stuff I talk about. So it's kind of nice to see like we kind of come to a lot of the same conclusions on things independently.
Yeah, man. I was talking on stream yesterday when I told everybody you would be here, and I was like, this is the only guy that I've met in a long time that I'm able to actually talk about like macro stuff. Like, yeah, what do you think about the bond market and this and that, you know? And we didn't even get to dive into that today. But you know, versus like, man, we're going to the moon. We're going to the moon. When, you know, that's one thing I try to talk about is how everything's interconnected. You know what I mean? If one thing, like there's always a bull market somewhere. Like you said, capital's got to go somewhere. Capital doesn't just sit and get ate away by inflation. You know, it goes somewhere. And yeah, so it's man, I'm super glad we met. And yeah, everyone check out his X. We're put the your X and everything up there. And then on the YouTube video, if you're watching the YouTube video later, I'll have all of his information down below. But all right, buddy, thank you so much for joining us. See you next time. All right, brother. Appreciate it. Man. Guys, what'd y'all think about that? That was a lot, huh? Let me try to go and get on. Man, this dang overlay ain't working today, like I said. Guys, that's a lot. Let's come over here, take a look at how everything is holding up. Oil's creeping back up. You see we got a wick down to 93. If we look at the stock market, the SPY, we're still kind of looking at, this is going back to a couple days ago where we peaked out on this RSI. We still got RSI going down as price continues to move up. Traditionally, that would be called a bearish divergence. But the only crypto trade that I have open, or the only perps trade I would say that I have open, is this oil trade. I might actually add to it. I want to check up on what's going on with the news. Anyone that just joined, this is Blowfin, our official stream sponsor. We opened this trade yesterday. It was up to about 18% at one point. Now it's came down a little bit, but there is a QR code on the screen if you are interested. And in fact, for just a couple more days, they've got this promotion going on for the Finance Freeman family. You can read through this. It's pinned over on my X page. Could also find a link there if you are interested. But just always remember, guys, anything we talk about on here, I'm not a financial advisor, just a random dude on YouTube. And sometimes I take bigger risk than other people take. But let's go look at the news real quick, see if there's any news that has popped off. Saudi Arabia's oil capacity has fallen by 600,000 barrels a day due to recent attacks. Okay. Dixie again, third test, still no breakout. This is the dollar. Typically, if the dollar goes up, risk assets go down, and the other way around. The first ceasefire negotiations between Israel and Lebanon will be held at the U.S. State Department in Washington. Okay. Market trading volume is skyrocketing. The daily turnover in S&P 500 ETF SPY has surpassed 60 billion. Record 29 trading sessions. This is already more than 28 days posted for 20. Yeah, retail is likened to trade. Breaking have Israel military have begun striking Hezbollah launch sites in Lebanon. Like, there's really no sign of anything. Like, is the Strait of Hormuz still open? I mean, still closed? Yeah, I'm kind of thinking this too, what this person said. Trump is set one clear condition: open the Strait of Hormuz immediately. Iran's response: we'll let ships pass through, but we demand it and charge $2 million per vessel. They just walked straight into the trap. Ceasefire. You know, I was kind of thinking that too, because Trump's had a lot of political pressure to end this. And if he's like, hey, I tried to end it, but you know, they didn't go for it. You know, I wonder if, you know, yeah, I just wonder if that's how it's playing out here. I'm back. Thesis: ceasefire doesn't work out on Saturday. Yeah, I agree. There's a 70% chance the SPY hits 666 by Thursday of next week. 85% chance S&P 500 66 by Friday of next week. Where does this data come from? Who is this guy? I don't know. I wouldn't trust him. Looks like he's got a painted on beard. This is not a part of the Kobayashi letter. Iran rolls out negotiations with the U.S. and will keep the Strait of Hormuz closed until full ceasefire established. And the Kobayashi letter. Here we go. The U.S. and Iran will hold in-person peace talks. So basically, there's been no change. The Strait of Hormuz is still closed. Israel and them are going at it, and the market's pumping. But we'll see here. This could potentially be a little low time frame, head and shoulders forming. If it did, that would take us down to about 675, which is nothing, right? And then we would have to see where it is from there. But yeah, we currently have a bearish divergence on the S&P 500. Like I said, guys, the stream sponsor is Blowfin. I appreciate you all being with us today. We will be back. Try to be back tomorrow. Tomorrow's my wife's birthday. I'm trying to figure out if I'm going to surprise her somewhere or what we're going to do. But I love you all, and thank you for joining us. Make sure to like and subscribe over on YouTube, retweet, and comment over on X. Love you all.